How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. We also got to put in the disclaimer. I'm not a financial advisor, and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. And today we're going to be talking about DraftKings. You guys know how much I love this stock. I love this company as well. But one of the things is, it's one of my high conviction plays. This is the type of play we hold for at least 3 to 5 years, and that's why I brought it on this channel. But before we get started, we have to go over an agenda. If you're new to this channel, just want to let you know we have timestamps down below in the description. But do keep in mind, if you are a shareholder or you're considering to get into a position, I think it'd be wise to watch the entire video. So the first thing we're going to be going over, there is speculation. Yes, there is speculation in regards, is DraftKings going to be buying the Bleacher Report? I think this would be huge. The article goes in depth to the benefits that DraftKings actually gets from this, and also the impact that it could also have on the stock, and also change the industry as a whole. So I'm also going to be adding, on top of my read on and going over with you, my analysis, giving my thoughts as we go through the paragraphs and the sections. You guys know how I do. And then the second thing, I'm going to be doing a technical analysis. Yes, DraftKings ended up having a strong day inside the market, but we want to see what are those areas that DraftKings needs to hold up, and where do we want to see the price going so we can start seeing some strong momentum and some moves to the upside. We know the analyst price target is around $70. But if you read that article, that could definitely change. But hey, you guys will look at that section, you'll be able to know what's going on. And then when everything is done after that, I'll be giving you guys my final thoughts. So let's get into it. So we're going to be going over a recent article that came out on casino.org, and it has something to do with DraftKings, which I'm going to share. So DraftKings had eyes for the Bleacher Report in 2020. The rumor could resurface. DraftKings reportedly made a run at acquiring Bleacher Report last year, and there are viable reasons why that speculation could reappear over the near term. An article by The Information out earlier today indicates that the sportsbook operator broached the subject of buying the scuffling sports media brand with then owner Warner Media at some point in 2020. What price Boston-based DraftKings was offering isn't revealed in the article, but Bleacher Report generated $140 million in sales last year, a 15% tumble from 2019, and one widely attributed to the sports shutdown forced by the coronavirus pandemic. The fate of Bleacher Report, perhaps including talk of DraftKings re-entering the mix, could be the source of renewed near-term speculation. Last week, AT&T announced it's merging the Warner Media business with Discovery. Discovery Group's Nine Media also reportedly expressed an interest in the sports media property. But with a $43 billion merger now at play, divesting of assets may be necessary. So to go over what we just read in this introductory piece, it's letting us know, hey, there was previous history before with DraftKings wanting to purchase the Bleacher Report. Since there's now been a combination in regards to AT&T and as well as Discovery, which they'll be forming a new company sometime within the next year, I think around mid-2022, then there's going to be some concerns in regards to the amount of assets that are being held, and they might want to divest due to the fact that the $43 billion merger is quite significant. And if they do decide to divest, then this could open up opportunity for DraftKings to get involved. So let's go for it. Why DraftKings rumor may have life. There are good reasons why DraftKings could be at the center of the Bleacher Report talk should that chatter resurface. Put simply, the gaming companies mention an array of acquisition rumors because it's widely believed the operator wants to diversify its revenue stream beyond daily fantasy sports and sports wagering. Moreover, DraftKings is proving to be active on the media front. The company recently purchased Vegas sports information network VSiN and inked a $15 million agreement with Meadowlark Media and was reportedly a player of the Action Network before losing it out to a Danish rival. It's clear DraftKings is prioritizing media assets. With no debt and over $1 billion in cash, it has the resources to go shopping. Last October, the operator notched an agreement to become the exclusive exclusive DFS and sportsbook provider across select Turner Sports and Bleacher Report properties. Turner Sports is a primary sports asset held by Warner Media. So to go over the rumor may have life, we see that DraftKings is trying to diversify their revenue streams, and they want to be able to actually invest in media and make revenue that way as well. I don't feel that's a bad idea. I actually think that is a great idea for DraftKings. We're going to get further in the article and it's going to talk about that, but keeping that in mind, they have been making agreements, they have been purchasing, like we see VSiN and also seeing with Meadowlark Media. They didn't get Action Network because they lost it out to a Danish rival, but the fact that they have $1 billion in cash does give them a lot of flexibility. Practical idea for DraftKings. Acquiring a brand with visibility such as the Bleacher Report could soften the blow of missing out on the Action Network for DraftKings. More importantly, it would give the gaming company an asset that directly rivals Barstool Sports. Penn National Gaming owns 36% of that popular sports media property and can eventually own the enterprise outright for $450 million. Penn derives significant advantages from that arrangement because the association with Barstool makes it possible for the operator to gain sports betting market share without high marketing and customer acquisition costs. Conversely, DraftKings isn't profitable due in large part to marketing spending, something Wall Street is mentioning with regards to the recently sagging stock. That could be a sign DraftKings will continue mulling media deals in an effort to reduce customer acquisition costs. And this is definitely one of the things where I feel like has to be highlighted here. We saw and we went over it on that earnings report. Yes, it was solid. It showed, hey, there's a lot of growth potential, but they were spending a ton of money when it came to sales and marketing. So if they can acquire a company that can help lessen the blow and lessen those expenses, we could see that having an impact on earnings reports as they start coming in and as things just go over time. So looking at it, let's say for a year from now, if we're able to get the Bleacher Report even before the end of this year going into next year, DraftKings is looking really good. And taking into consideration, I think the 52-week high for like Penn is like well over $100. So the fact that, hey, DraftKings has like a price target in the $70 range, just imagine if they add this to their arsenal, it could definitely bring DraftKings to a possible $100 per share. So that's what I wanted to share with you guys. We'll have to see how the rest of this unfolds. So we're going to be doing a technical analysis for DraftKings. So let's see how it performed on the day. So ended up closing at $47.86, being up 7.24% on the day. On the low, it tested $44.34, and then on the high, testing $49.26. So first thing that we're going to take a look at is seeing how it lines up with our indicators. So when we see it is below the 100-day, it's below the 200-day, and it's also below the 21-day EMA, even though we did see some price action that was right above it. So that was good to see. If we take a look at the RSI down below, it is right around 42. So it's right below 50 where it's at fair value. It is not in that big time oversold territory where we look for around 30 and in the 20s, but at the same time, it is still not overpriced. Another thing to also take into consideration here is that I want to see increasing levels of support from DraftKings. So what does that mean? I want to see it being able to hold up above 44. If it can hold this area as this week progresses and we continue to have bullish behavior inside of the market, then there's no doubt in my mind we can get up to this $52 level and reach right back here to where you have the 200-day. And also for your information, very quickly, the chart that we're using is actually the 1-day chart on a 1-year time frame. So to kind of just conclude this and finish this off, so what I want to see, yeah, hold up that $44 level, and if you're looking to add or get into a position, look out for that $44 area as far as for an entry if you are considering it. Of course, if it does pull back, then you could definitely look out for the 43s. This type of play is the type of play we're looking to be holding for at least 2 to 3 years here. This is not something when you buy and you sell it in a month or two. 2 to 3 years at the max. And that's what my goal is. You might have different goals, but I know there's a lot of upside if you follow this strategy. So for my final thoughts on DraftKings, you guys know I believe there's a lot of upside in this stock. You guys also do know Kathy Woods has also been loading the boat. But one of the things that we really need to take into consideration here, if DraftKings can get the deal done and acquire Bleacher Report, this will be huge. Am I saying it's going to happen? No, but there's a lot of speculation and there's a lot of noise. We've already talked about on this channel what's going down between AT&T and as well as Discovery. We already know there's a lot of money in that overall deal and they are looking to divest some of those assets. So if DraftKings can kind of swoop in and grab the Bleacher Report, that would be great. They spend a lot of money on sales and marketing. They're trying to acquire customers, so you know what? They got to have a big marketing budget. And that definitely does have an impact on their earnings report that even happened even recently. So by getting Bleacher Report under the helm, they could start reducing those costs and the balance sheet will look a lot more healthier. We combine that with their potential in regards to how much revenue they're generating. And as far as the market is concerned, whew, we see some big gains here. To kind of put things in perspective, if we take a look at Penn, when I looked at the 52-week high, I think it was around $142. Don't quote me on that, but it was around 140. And the fact that they actually made a deal with Barstool, just look at that. $142 is where it reached. So let's just say, okay, let's take everything that's adjusted and so forth. Let's call that 52-week high at around 120. We look at DraftKings currently of where they're at. There's a price target in regards to it going to at least $70. If they acquire the Bleacher Report, no doubt in my mind that average price target will move up at least another $20, putting it around maybe 90 to 95. Wouldn't be too surprised if it ended up getting 100. And again, this would probably happen in the best cases of scenarios, whether we end up having a big time bull run. But again, this is happening in a year. But if you're going to be holding DraftKings like myself for at least 3 to 5 years, it's definitely going to be hitting that number, even if they're not able to actually acquire the Bleacher Report. But the fact of the matter is there's a lot of things to take into consideration here. And I almost forgot. DraftKings also has $1 billion in cash on hand. So they definitely gives them a lot of flexibility. I don't know what more I could really tell you. If you are considering to get into a position, hey, continue to do some more homework and some more due diligence. But for myself, I'm happy to have this in my holdings. And I'm also happy that I was able to share this video with you. We'll be talking real soon.